Hello and welcome to our finale episode for season 1 of the Iconic Insights podcast. A little bit different in terms of how we're going to approach the podcast today, but we're excited to bring you along and answer as many of your questions as physically possible.
So hello everyone and welcome to the final episode of season 1 Iconic Insights by Icon Accounting. So today our podcast is going to be slightly different to the rest of the season. So we are back where we all started and I am joined with my co-host Sean. So
hello
Sean.
Thank you very much.
So yeah, today there is going to be no special guests and there's going to be no focus on a particular topic. But you may have remembered that when we reached 400 reviews, we had a bit of a celebration to celebrate the milestone. And as part of that, we asked our contractor community what you wanted us to focus on the Iconic Insights podcast. So today we are doing exactly that. We are going to focus on the matters that matter to you most. So
that was a tongue twister.
Yeah,
Fair play. Fair play. That was impressive. I'll give you that. That was impressive.
Thank you. So yeah, I guess let's go.
Jump into it. So yeah, again, this episode we're basically dedicating to answering the questions that came back from that campaign.
Exactly.
Do you want to hit the first one? Do you want me to answer? I suppose if you want to give people a little bit of insight into what the first one was, and then I can kind of, I suppose, jump in.
Go. So the first one was from Stephen, and it's about resilience in tough times. So he basically asked about resilience and how professionals can bounce back when going through a tough time. So Sean, you're a sales expert, so I'll let you answer this one.
I'll say that's not self-acclaimed, but no, I appreciate it. I think, and again, regardless of the sales piece, I think for any professional, kind of accepting the fact that there will be tough times is probably the first step. You know, don't go into any career, any role thinking that it's going to be plain sailing, because
it's not.
Yeah, it's definitely not. There'll always be challenges. What I would always focus on with regards to, I suppose, kind of trying to deal with setbacks or, you know, something that's not essentially going your way. It comes back to when things are going your way in terms of celebrating the small wins. So to me, if you're not celebrating the small wins and then you do hit a time of, I suppose, disruption or, you know, a period where it's not all going, I suppose, according to plan, you haven't really got anything to kind of cling on to. You haven't really got any kind of even core memories where you can kind of focus back on the positives as well. So yeah, I'd always say during the good times, celebrate the small wins, because they'll mean an awful lot more to you during the bad times. Yeah. The other point then that I would make is always having the next goal in mind. And it is a goal. It's not, you know, I would even say it's a goal rather than a target sometimes, because some people would take target as, if I don't get to that, you know, I failed essentially. Whereas if you've constantly got something to aim towards, that will always kind of make sure that your mindset is in the right place and that you're focusing on the positives.
And keep you going.
It does. It does. It definitely does. But again, to kind of, I suppose, recap on it, don't think that everything is going to go according to plan all of the time. If you are someone out there that has had that, fair play, get in touch and let us know. Let us know the secret. But if you kind of expect that, yes, there's going to be challenges, there's going to be hurdles, and have the confidence to essentially back yourself to get over them. So back yourself, celebrate the small wins, and always have the next goal in mind, whether it's gone good or bad.
Very good. Good advice.
So hopefully that's given Stephen a little bit of, I suppose, insight into the way I would approach that.
Exactly. So the next one.
Yes, the next one then, again, this one came in from George. It's quite similar, I suppose. Well, it could be linked, I suppose, quite easily. Contingency planning for dry spells. So again, this is specifically relating to contracting. How can contractors plan or have a contingency in place for a dry spell? And again, for anyone that's listening, a dry spell might be a period in between contracts. You may have been expecting your contract to extend, or you know, there might have been more work on that project, but ultimately you've now found yourself in a period where there is a break in between your current or your last opportunity and your next opportunity. What steps should contractors take to prepare financially for quieter periods?
Well, I think first I'm going to pull a resource. So it's Iconic Insights episode with Gavin Fox. Listen to that if you are expecting your contract to be coming close to an end, and basically get your plan in place for what you need to do. So Gavin offers brilliant advice for prepping for contract renewal or negotiations. So go listen to that first of all. Financially, it kind of depends on what your setup is. So let's say if you're an umbrella company contractor, you receive your net take home pay once we've received the funds. So it's basically set up like a rainy day fund would be my advice. If you do that yourself, like even through Revolut, that's absolutely fine. Have about 3 months there. So just give yourself financially a bit of leeway that you have like 3 months to play with there to get your next contract or have negotiations in place. Then with your personal limited company, it's pretty different because you have more control and flexibility there. So with a personal limited company, my best advice would just be engage with your account manager, and they'll be able to go through tax planning with you. You'll be able to build up your company reserves and plan for when you're going to have time off or those unexpected scenarios and rainy days, essentially. So it's just build that fund up as you contract, have the funds there. It's like a saving pot as well. It's just in your umbrella or your own company, and you can take your payroll then. So yeah, that would be my advice.
Yeah, definitely. I think it's solid. The Gavin episode will definitely give people an awful lot of, I suppose, kind of insight into, again, not just from a contractor's perspective, but from a hiring client and a recruiter's perspective. So that's definitely a top tip there. The point about the umbrella company, one other thing that I would like to add to that is, right, and there's this consensus that you need to be looking at an opportunity for kind of 12 months plus to start a private limited company. I agree with that to a certain extent. But I always feel that, let's say, for example, if someone has got a 6-month contract when they're starting, umbrella company all day long, first time contracting, makes sense. If they then get a 12-month renewal, at that point after the first 6 months, I would be strongly considering a private limited company.
Yeah, make the move.
I would, because again, even if it's a case where you're not 100% certain that you're going to continue contracting after that next 12-month opportunity, the flexibility, like you said there, that it'll give you, you could make 12 months pay as a contractor quite easily spread out over 15 monthly salary payments from your own company.
Yeah.
And it's a benefit in terms of the level of income tax you're going to pay, obviously, because it'll kind of follow up into next year.
And then as well, like you kind of have flexibility when the contract ends to decide what you're going to do. Like if you leave the company dormant for a while, or
honestly, we've got some clients, as you know, that have been, operating through their own private limited company for the last 8 or 9 years. They haven't been contracting consistently for the 8 by 12 months in the year. But what they can do, and what it gives them more flexibility to do as well, is to really take a step back because they're not under financial pressure, and to make a decision on what next opportunity they actually want to take.
Exactly.
Whereas if you're in an umbrella and you haven't kind of taken the steps to secure, money involved in your own private Revolut account or whatever it may be, you might be, I suppose, a little bit more prone to kind of jumping at an opportunity when it presents itself, instead of taking a step back and really assessing what you want to do next.
And also not just jumping into
100%. 100%.
Yeah.
So yeah, hopefully that has given George all he needs to kind of to kind of keep him going through any dry spell, which touch wood there won't be. Okay, Chris. Yeah. Do you want to give us?
Yeah. Hi, Chris, as well, one of our recruiter friends.
For years, may I add?
So Chris Byrne's focus was that he'd love to see how you could introduce contracting as a career choice for more junior roles.
So I'm going to give a quick kind of level of what we've been doing over the last number of years to try and, I suppose, have an impact on that. And then I'm going to hand over to you to get your opinion, if that's okay.
Yeah.
So what we've done is we've seen, obviously, the demographics of contractors changing massively over the last kind of 5-6 years. Contracting probably a decade ago was very much linked with, not ready to retire, but kind of nearing that age.
Yeah.
And, high level experts, obviously, within their field. To get to that status, you obviously had to put the years in and, accumulate the experience, etc. Absolutely. Yeah. Whereas now, I feel like that there's definitely a kind of a much more open mind in terms of contract roles can be for, post university. If you're graduating from a university, there's definitely roles that you can slot straight into. But in terms of what I kind of counter doing to try and bridge that gap, I suppose, is we're attending the likes of the grad fairs. We're also partnering with different universities wherever we have an opportunity to do so, to basically go out and tell graduates about what contracting is. Because I know personally, when I was in college, or even when I hadn't a clue, contracting to me was, there's a construction site down the road and there's 2 or 3 different companies, and that's what contracting was. But what we're trying to now do is we're trying to basically show graduates that are in college that it's not just full-time positions that you need to kind of, I suppose, take into account and consider.
Yeah.
So that's kind of where we're at. We're going to continue that work, obviously.
Yeah.
And we're confident that it will definitely make a difference in terms of obviously the graduates that are coming through, that they'll also consider contract roles and they'll kind of be a little bit more familiar with the benefits of contracting. From your perspective, Shauna, is there anything else to add? What would you suggest as kind of the best approach there?
Yeah, I kind of like, I definitely agree with like all your points there, to be honest. I was in NCI last year, so I was speaking to grads and kind of going through contracting, and as you said, like, it's not a career choice that I think a lot of grads would initially consider. I think it's almost like, I have to get a grad program, and it's like, no, you don't. Like, your grad programs are a year or two, so you could use contracting as basically that grad program, let's say, to approach a junior, let's say IT professional, which I think is particularly an area that's on the rise, as we see a lot of like junior IT roles on the market. I would say, like, basically sell it to them that they get to work with different companies, get to build their expertise, their knowledge, deal with different clients. But that would be the point I would focus on, not... Probably more so than the income aspect of it. Like, because it's a way of building up your CV, essentially, and then getting that dream role you want in the future.
I also think that you probably get a little bit more exposure to a higher role on a contract basis than you would if you were to just go in through, like you say, a grad program. Your first 12 months in that company are going to look very different if you're on the grad program versus if you're on a 12-month contract opportunity. So there's loads of opportunities. But again, Chris, we will continue doing
whatever we can.
We can to push more and more, I suppose, graduates coming through and get them interested in contracting as soon as possible. The next one is a tough one. It came in from Camille.
Yes.
And Camille asked us about cross-border contracting and cross-border tax efficiency and compliance.
Yes.
So again, I suppose the best way to kind of approach this one in a politically correct manner would be to mention that obviously there is a general rule of thumb. In Ireland, the UK, and a lot of the European countries, the tax residence rules are based on spending 183 days physically in that country. So if you have spent 183 days out of the last 365 days in a specific location, the likelihood is that you are a tax resident there.
Yeah.
To enter a caveat there straight away, there are kind of complications with, let's say, for example, if you spend 220 days out of the last 2 years, in some countries that can be taken into account as well. The best advice really that I think we can give here is that by all means take into account the local tax advice as to where you currently are, because even if you were to relocate today from Ireland to, let's say, Spain, somewhere nice and warm, warmer than here anyway. If you were to do that, your tax residence is still technically Ireland, even in the first, month, 2 months that you're actually operating from Spain. Having said that, the Spanish tax guidelines have a completely different kind of approach to what you're responsible for, what you have to report, etc. So best advice we can give is consider your local tax advice as to where you are before moving, but also make sure you reach out to a local tax kind of advisor.
It's basically being informed of the tax regulations in both countries. And I would also kind of, again, just reiterate that don't take it for granted that all of the rules are the same, because they're not. No, it's very specific, and it's down to the person as well, because it's also like tax residency, where they're domiciled. There's family ties, owning property can come into it sometimes. So it can be quite, I suppose, intensive to try and get your head around it. But again, one of the hardest questions that we often get is, I'm thinking of going traveling and I'm allowed to work remotely. And we're saying, okay, well, where are you going traveling to? And fair play to the people that are doing it. They don't even know where they're going traveling at that stage. Nightmare. Absolute nightmare from a tax, compliance perspective. It's not impossible, but it does mean that you could essentially have to try and familiarize yourself with 6 or 7 different tax codes. Now, again, you're not trying to wrap your head around every aspect, but just in terms of what am I supposed to be reporting, who can pay me, what way does it work? Definitely take into account the local tax advice, because you're definitely going to need it. And look, that's all you can do at the end of the day. Perfect. So moving on to the next point. So this came in from Gary Mead, so one of our other recruiter connections. He asked for a discussion on the common myths about contracting. So I am going to go straight in there with the first one, and it's mortgages. Contractors can't get a mortgages and the lenders won't engage. with contractors. No, not correct. There is some changes, hopefully, in the near future when it comes to mortgages. Are we going to spill the beans?
Yeah, you may spill the beans.
Okay, I'll let you do it.
So there is essentially, and again, we've tried our best to keep as up to date in terms of any new developments in this space, because we've obviously got a partnership with the team at Humdinger. We had Bertie on. I'm not sure whether it was episode 4 or 5.
I think 5.
I'll have to fact check that one. Apologies. But one of the things I suppose that was quite evident there was that ultimately the rules are the same in terms of what the lenders want to see before they're actually willing to give you a role. The good news is, and the change since that podcast with Bertie, is that there is a new entrant in the market in terms of a broker. And what is extremely positive for people that are considering contracting for the first time is this brokerage is not only going to take into account, obviously, your contract income, but they'll also take into account your previous income. So if you're moving from a full-time employment role into a contracting role, it's now an awful lot more straightforward for you to be able to apply for a mortgage, and as quickly as within 3 months of starting contracting, which is a game changer, an absolute game changer. So extremely positive news for all of our recruitment connections there, because again, as you can understand, an awful lot of people, especially given the housing crisis and everything else that's going on, they would speak to an awful lot of candidates that would be interested in contracting, but then they get to the mortgage piece and it's, it could cause 6 to 12 months delay. Yeah. That's all changing. It's all changing. We're going to have some new material going out very, very shortly on that. So make sure to keep your eyes peeled. But again, extremely positive news for the overall landscape. And that is hopefully the mortgage piece boxed off in terms of myths.
Exactly. The other one I would see is benefits. So I lose the benefits I make from like the department, so like job seekers benefit, illness benefit, maternity benefit, when I make the move to contracting. So there can be a bit of concern if you have a first time candidate and that aspect of it. But the good news is, regardless if they operate under a POE umbrella company or a director umbrella company, they obviously either pay Class A or Class S PRSI, but they do still make contributions to benefits, slightly different depending on what solution that they do make. But yeah, that's...
Yeah, then just to add to that, even let's say from a company benefit perspective.
Yeah.
Like, again, and I completely understand that some people may be coming from a role where they've had, company pension contributions. Yeah. They could even have share options. There's an awful lot that can come into those benefit packages now. The one thing I would say to you is that, again, based on the work that's been done in the background by Jared, obviously our managing director, and I suppose finding solutions for our client base, is that not only can you replicate a benefits package from a permanent role, you can actually improve it. And again, the best example I can give before we move on to the next point is you might be capped at a 6% pension contribution that your company will match in terms of your employer. With contracting, you could essentially set that at 20%. You could have it 25% if you want to. But again, there's different kind of criteria that come in there as
it's tricky.
as an asterisk. But it is possible. So you can take back an awful lot more control as to what benefit package you want to build, and you can essentially kind of custom make your own. So definitely another myth that you lose your benefits.
Yeah, I think there's one final myth I would definitely mention there as well, and it's about security in the contracting market, and that it's like
stopgap.
Yeah, that was like the exact words I wanted. But yeah, I think that has definitely changed as well. I know I seem to always bring it up, but it's COVID, and I think that was a massive changer in the recruitment space. I feel like a lot of people seeing that security in permanent employment wasn't necessarily as solid as they thought it was. Yeah. But yeah, I think like contracting, it can be a long-term career. We've seen people, as you said, they start with the umbrella for a 6-month contract. They progress to a personal limited company. Now they've been contracting for 8 or 9 years.
Part of the furniture with us at this stage. Yeah. So, and again, like if you were to even suggest going back to full-time employment to some of those people, they'd scoff at you. Yeah. No way. Because again, they've seen the benefits firsthand. They're living the benefits on a day-to-day basis. Again, the stopgap solution, that was definitely something I think that existed probably about 10 years ago. Yeah. But it has evolved so much since then. And yeah, like it's definitely not a stopgap solution. I know we use COVID as an example where it wasn't the contractors that were laid off during COVID, but even if you look at some of the more recent tech layoffs, it's not this kind of, and again, I'm talking about genuine contract opportunities here where it's a niche skill set, or you're kind of bringing in something that's not existing in the organization as a whole. They're not letting go of you. you know, they're really not letting go of you if you've got that new skill set. Instead, they're
Yeah.
letting go of, I suppose, permanent staff that's more secure. So again, I personally don't think there's such thing as permanent staff anymore. Everything is very volatile depending on markets, economies, and etc. So
Yeah, big statement.
keep as much control as you can. You know, that would be my point.
Next question, I guess, then.
Yeah, we'll move on from the myths. But if there are any more myths
Yes.
that you've got, that anyone comes across, obviously, please feel free to shoot them across.
Yeah.
They're typically the ones that we come across most of the time. So we're more than happy to dispel any more myths as they come.
So, Joel, you wanted to know about how to manage your tax credits if you have more than one role. So, yeah, like, I guess it really comes down to the level of income between the two roles. You have, like, a lot of people would assign their tax credits and the tax band to the higher income. It does mean that obviously with the other source of income, it's going to be at your higher level of tax. So it's just kind of to bear that in mind.
It's a balancing act, isn't
Yeah.
it? Like at the end of the day, it will all match up.
Yeah.
If it's a case, obviously, that you're earning income. And again, there's probably a little potential kind of trick here that you could maybe consider, Joel. But if it's a case that you want to receive the actual income into your personal bank account on a month-to-month basis, regardless as to which way you split your tax credits, it'll balance itself out once you've done your income tax return. If I were you, or if I were in that position, I would definitely be considering the private limited company. Because again, going back to that point about storing funds, a little bit more flexibility in terms of not processing all the funds through income tax. If you can live off, let's say, the full-time salary where you're working that role, but you're also doing contracting on the side, even if you want to take some of the contracting income as salary, by all means, but it just gives you a little bit more control than, let's say, the umbrella company would, where it has to be processed through payroll.
Didn't even think of that point.
See?
Brilliant.
So yeah, Joel, definitely reach out and see if it's a case that a private limited company would be of interest, because it might just give you a little bit more of an opportunity to pay less income tax, and to kind of even, again, go back to the point that we'd made, save for a rainy day, or even, you know, there's
funds
loads
there.
of different opportunities there, investments, etc. So hopefully that gives us a little bit further kind of clarity on the managing tax credits.
Yeah,
But
think
if
that
it's a case that you do need both incomes, it will balance itself
Yeah.
out regardless as to which way you split them.
Yeah. Mortgages was the next topic. So Anna and Keith, you both asked about the mortgage applications for contractors. So yeah, I feel like we kind of covered that one. We'll have new material hopefully in the very near future to release on that. So if you want updates on that, absolutely reach out, let us know. We'll be sure to send out any messaging when we are allowed.
Absolutely. We're just waiting on kind of final details to be confirmed on that, and then we'll share all of that.
I think go back to Robert Whelan's podcast episode as well. So I think the one message I really got from Robert is it's like mortgages are very specific, although there are rules. It's like it's not just you, it's your partner, it's your scenario. So just have a consultation with Rockwell and Humdinger Mortgages if you do want to go through the process there. It's included in the service. So yeah, just if you are looking for the process and going through an application, just reach out, at least avail of it. You'll hopefully have more knowledge than you went in prior to the consultation anyways.
Absolutely. And again, it might not be immediately relevant for some of our audience, but what I would also say about that episode is Bertie gives some great tips in terms of how you can prepare for it.
Yeah.
You know, so even if it's kind of 12 months down the line that you're thinking about a mortgage,
start it now.
Watch the episode now, put all of those, I suppose, tips to good use, and you'll be in a much better standing in 12 months time when you're ready to apply.
Get the mortgage.
Yeah. Pension planning. So, again, pension planning always comes up quite frequently. And our very first guest of the series, Keith, went through obviously the pension piece with us. He did cover an awful lot, but again, typically,
An awful lot has changed.
an awful lot has changed since then. So again, there has been, I suppose, some notable changes in the market. But even before we go into kind of the auto enrollment piece, there's obviously been changes in terms of your pension contributions and how much you can put in, etc. So we done a webinar on that just before the new legislation came into effect in January 2025.
Yes. Yeah.
So up until the end of 2024, there was probably a little bit more flexibility with every kind of pension available on the market. Now it's a case where they're starting to, I suppose, I won't say restrict, but they are definitely starting to tighten it. In terms of how much you can put in to a pension contribution and avail of the tax relief, etc. But definitely, if that's of interest, we can obviously make sure that that's readily available to everyone if they want to have a look at what changes are coming. We've then also got auto enrollment coming. So if you don't currently contribute to a pension through your umbrella, personal limited company, full-time employment, whatever it is, there is a scheme coming essentially that's auto enrollment. Auto enrollment basically means that automatically you will be enrolled into a pension scheme. There is massive differences between going onto an auto enrollment government kind of setup scheme and having your own private pension. We will be doing a lot more on, I suppose, the differences in terms of the tax relief and the benefits to having your own private pension over having the actual auto enrollment piece closer to the time. But I believe that's the 1st of September is still the guide. It has been moved a couple of times, so we won't, hang our hat on that date being the go live date, but that's what they've said at this stage, the Pension Authority of Ireland. So again, we'll keep everyone updated on that. There are definitely some tips that you can take from Keith's episode, but it's just to take into account that there have been some changes since then, unfortunately.
Yeah, unfortunately. Big changes.
And again, it's on our agenda to make sure that we refresh and, give everyone, I suppose, the most up-to-date information. Yes. The issue at this moment in time, to be honest, is that information is not even final from their side. So we'll wait till that one plays out a little bit more.
Yeah, and then have a final edit.
Yes.
Uploaded on our portal.
Yeah.
So.
Again, what Shauna touched on in terms of the pension piece, if anyone's looking to have a discussion, obviously the team at Rockwell will be much, I suppose, better equipped to have the conversation and give you them, I suppose, bespoke calculations at this stage. So if you are not already contributing to a pension, I would definitely recommend reaching out now. Doesn't mean that you have to go live with pension contributions from your next payroll or otherwise. It just means that when auto enrollment does come, you know exactly which option is right for you at that stage.
Moving on. So, Mark, you asked about investing capital within your company. So, investments, I feel like this is one for you because you our BD team in Icon Accounting are mad into their investments at the moment. So, yeah, it's obviously, it's a key tax strategy for future planning. It's definitely, not to give a spoiler away, but something we are going to be focusing on in season 2.
Yeah.
And you may have seen that we had a partnership with Quintus Capital. So that was at the end of last year as well. But to do with the EIIS scheme.
Yeah.
So if you do want some information on that, Mark, absolutely reach out. I don't know.
I was fascinated by that. I'm not going to lie. Like, I had heard of the EIS scheme, but obviously I've read documents and I've read, material online about it. When we done the webinar with the guys from Quintus Capital, it opened my eyes up so much more. And it's a lot more, I find it a lot more interesting when you can see some of the brands that they've actually invested in beforehand.
Yeah.
So, again, to kind of, I suppose, recap on what Shauna said, there's multiple different ways that you can invest into capital within a company. The big thing I would say is, and this is going to be contradictory because we're obviously going to be on the internet saying this, don't believe everything you say or hear or read on the internet when it comes to investing through a company. Again, you'll see an awful lot of, I suppose, content creators from the UK, the US saying that this is possible, that's possible. Just make sure to reach out to your own personal accountant because, again, the tax codes can be very different. I know, for example, in some countries, it can be a lot more beneficial to invest in property through a company than it is in Ireland. Again, I'm not saying it's not beneficial to do it here, but it's just to make sure that you're fully aware as to the different tax requirements and kind of even the different tax rates. Quick kind of closing remark I'll give on that is, for example, any income that you generate through investments through a company are not liable to 12.5% corporation tax. It's 25%. So that can be a big difference, obviously, in terms of if you're going into something thinking that you're going to get a much bigger gain. When you're paying 25% on the corporation tax alone, it can make a big difference. The EIIS scheme is definitely something I'd recommend to everyone. That typically is targeted towards the back end of the year. So the 2025 kind of funding scheme has now gone live based on 2024's kind of, I suppose, opportunity. But again, it'll be the same in 2025 where your 2026 scheme will be very much available. So yeah, definitely reach out to the guys, reach out to us. We can obviously put you in touch with the team at Quintas, and very much like the pension kind of auto enrollment piece that we just said, doing that now in advance of when you're kind of up against it in terms of it's Christmas, it's end of year, you've got all of these things going on, and the last thing that you've got is an hour and a half to spend speaking to someone about potential investments. do it at this stage of the year, and then you can obviously be kind of well informed in advance of the deadline, and you can make a decision kind of over the course of the year. Prepared.
Yeah.
I like it.
Yeah.
So yeah, I think that's kind of where we are from a investing piece.
Yeah.
There's obviously tax strategies for future planning that we could go into further detail on, but again, they are such bespoke kind of calculations. I would always recommend reaching out to your account manager and asking them that very question. How would they recommend that you can, I suppose, plan for the future strategically, and also use, I suppose, any funds that you've got in the company to invest?
Okay. So next, contracting versus permanent employment. So Graham, you wanted to hear about the pros and cons essentially of each. So I guess I'll be the big seller of contracting.
Oh, deadly. Deadly.
I guess really the starting point would be your higher income that you can essentially make. So contractors have your day rate, so you're basically paid for the time that you do work. That includes, it can include additional benefits. So essentially, over the course of your contract, you can make your higher income because of that.
Would you put a percentage on it?
Normally 20 to 40%. I feel like that's still.
Definitely kind of, I'd be aiming towards the 20%. Definitely aiming towards the 20%. You should be seeing 20%.
Yeah, and then as well, let's say when it comes to your income, you have your business expenses there. So like, let's say for someone in IT, if you need to purchase equipment, whether it be like a laptop or other like software, and then you can process that under the director umbrella company solution. So again, just availing of that tax benefit. You have other tax planning strategies, particularly with the personal limited company. So if you are looking at tax planning long term, like definitely reach out, get in touch about the PLC, because that's definitely a pro of contracting. What else? I guess really professional development, like your skills you build, the expertise,
the network you kind of, I suppose, engage with as part of that. Yeah,
I think they would definitely be the pros of permanent employment.
Oh, you're just doing the pros of both. I have to be the bearer of bad news on both sides. Okay.
Pros of permanent employment, I'm like, I don't even
see, contracting's that good, there are no pros.
I guess it's more so that, like, if you're someone that has a bit of concerns about being self-employed, that, like, if that's what you want, that stability, that you have it there, essentially, I think that would be the main pro I would see with permanent employment.
Yeah, I very much think that, again, and I think we always are quite open in the fact that we say the contracting is not for everyone out there.
Yeah.
Some people would, I suppose, kind of value a sense of belonging much more than income. If you're one of those people, maybe a permanent role would be a better fit to you, where you know, you're kind of, I suppose, building a culture within a company, or you're kind of looking to create a long lasting impact within a company. Whereas other people maybe just very kind of project focused and output focused. Once they deliver that, they want to move on to something new. So again, it does really come down to the individual. In terms of the cons of contracting, the only real con of contracting from my perspective, to be completely transparent, is the likes of if you're sick, unfortunately. If you don't have the correct cover in place, and again, it's a big caveat, there are, protections and policies you can put in place, the illness benefit, etc. But like you touched on, you get paid for the time that you physically work, and that's typically why you receive a premium in your payment. So it's a case that, for example, if you want to take holidays, you have to be a little bit more kind of organised in terms of, okay, well, I'm not going to get paid for that 2-week holiday that I'm going off to the Maldives, but you will obviously have the additional 20% to make sure that you're enjoying the time in the Maldives. Other cons then, like, again, we've kind of done our utmost to make sure that we're addressing the cons one by one, as they progress and as they become more relevant to our client base. Like mortgages was a big one. We went off and we created the first partnership with, a brokerage that was very, very experienced in the independent professional market. Pensions was one before my time, but pensions was a challenge at the start. We went off and we kind of sorted that one. Again, we're kind of building more and more partnerships to remove any potential cons that are there. Obviously, the con, and again, I'm going to say that it's very much similar from a contract or a permanent perspective, is unfortunately, if it's a case that you're no longer required or your skill set has been deemed, I suppose, surplus to requirements at any given point, it's not a job forever. But I would very much match that in terms of permanent employment. It's quite similar. You can be let go from a permanent role equally as quickly. Redundancies, etc. They all come into effect. So cons of permanent employment, in my opinion, you've got the, I suppose, kind of office politics. I'm not saying that every place of work has office politics, but the bigger the organisation, typically there is a level of politics that comes with them. Lack of kind of, I suppose, control. And I mean control over what you're doing on a day-to-day basis. Obviously, that kind of comes with self-employment, that you do have that control. But even in terms of, let's say, the pension piece that I touched on earlier, you were kind of capped in terms of what your company is going to contribute to your pension based on what their pension scheme is or what their, you know, their internal policy is. Even in terms of growing and, let's say, personal development, like we touched on, you can very much kind of, I suppose, be at the wheel in terms of where you want your career to go from a contracting perspective. Whereas when you're a full-time employee, the company can very much steer, I suppose, as to, well, we see this as a kind of priority for the organisation in the future. Therefore, we want you to focus on this side and not that side. So I would be of the opinion that, you know, contracting puts you back at the driver's seat in an awful lot of regards. But likewise, with, you know, being at the driver's seat, you've got responsibilities as well.
You need to plan.
Exactly. The right plan, the right support, the right kind of, I suppose, strategy in place. And even, like you say, if you can remove that worst case scenario of I'm going to be let go, if you have planned correctly and you've put yourself in the position where you can cover your salary for 3 months of the year, it takes a massive amount of that stress away and it removes that kind of, I suppose, downfall. Yeah,
definitely.
So hopefully that answers your question, Graham. But again, more than happy to I suppose, continue that conversation if you feel there is more to discuss. The emerging technologies and AI piece. We obviously had an awful lot of people mentioning this, that they wanted to learn more about the emerging technologies, and AI. We did have a very esteemed guest on called Cutie. Who went through, I suppose, the emerging technologies that she sees kind of being at the forefront for the next couple of years. AI is obviously massive, huge buzzword. Even since that episode, there's been changes. You know, the deep state, and there's been an awful lot kind of I suppose, of knock-on effects from that. But we're definitely going to be bringing in more topics on the emerging technologies. Again, I think the best advice we could probably give there is what Cutie had recommended in terms of the publications and kind of the journals that she subscribed to. That's typically, I suppose, kind of market leading in terms of the new technologies that are coming up and where you could find your next opportunity if you're an IT contractor.
And I can, again, have a little spoiler here. One of the guests on next seasons will be able to cover an updated version of emerging technologies. So
looking forward to it. I don't even know who this is, by the way, but I'm looking forward to it. Okay, contracting at different career stages. This was one from Damien. I think it's a really good question, to be honest. So Damien wanted to hear about the pros and cons of contracting at different stages of your career. This was another topic, obviously, that came up quite a lot. So let's see if we can cover as many angles as possible.
Yeah, I think Chris's question kind of at the start covered like the junior. So like the benefit basically of contracting there is it opens doors to opportunities. You're building your skill set, building your expertise, and kind of knowing what direction you want your career to go in. So it just gives you access to basically different clients, different industries, and from that you can build out your career as well as having the higher income there as well. I think then when you move on throughout your career, you kind of get to a stage of pension planning and your mortgages and everything. So obviously your benefit of contracting there is you have the opportunity to build a deposit, build your savings as much as you can, and get the mortgage approved. So just from an income perspective, that's the main benefit I would kind of see as you progress through your career. And then later career, retirement planning is the main one. I the way I always typically answer this question when it comes up, because it does come up from time to time, and it doesn't necessarily come up in the exact manner that Damien has put it across. But if you're speaking to someone, let's say, that's pre-mortgage, and if you're speaking to someone that's post-mortgage, I will have two very different conversations with those two people, because they are at different stages in their life. What I would say is contracting gives you the flexibility to ultimately kind of, I suppose, flick the switch between maximizing income and maximizing tax efficiency. And that very much, in my opinion, comes into the pre-mortgage, post-mortgage conversation. Because pre-mortgage, obviously, you want to maximize your income. Yes, paying a lot of tax is painful. I completely comprehend it. But unfortunately, it's part of the poison in terms of earning a lot of money. The second aspect to that is, even if you have got your mortgage in place, you can now flick the switch from maximizing your personal income to maximizing your tax efficiency. So it means that you can actually reduce the level of salary that you're paying, and you can start to take advantage of those tax strategies that we touched on a short while ago.
So yeah, I would always say that you need to look at it as to where you are, but you should always look at it as to, well, what are you trying to achieve? Like if it's a case, for example, that you want to retire at 50, contracting can do that for you if you plan for it effectively.
Yeah.
Whereas I would personally see that as to be a little bit more difficult in terms of retiring at 50 in a permanent role.
Mm-hmm. No, definitely. And I think as well, even with the likes of the solutions, like kind of everything is very specific to where you are in your career and your professional journey, basically. So yeah,
I think again, one thing that I would say, right, is that, and it's probably testament to the service level that the guys offer, but there's an awful lot of people in Umbrella that shouldn't be an Umbrella anymore.
They should be PLC.
They should be PLC. But again, it's because of how good the service is, how good the rapport and the relationship is with their account manager, how frictionless it is for them in terms of, you know, they don't have to do literally anything other than the time that they're working. But again, I would say that like it's definitely a case where you could potentially be missing out on opportunities there by not having the conversation. So almost push yourself outside of your comfort zone if you are someone that's been in an umbrella company for a number of years. Yeah. Because I would hate to be you'll definitely benefit from it, but I would hate it to be the case that in 5 years' time you regret not having that conversation today.
Earlier. Okay. Minimizing contractor fees and banking options. So Helena, you wanted to know about minimizing the fees and including the pros and cons of using a Revolut business account versus a traditional bank. I feel like this is another one that you'd be good at too.
It's one, I suppose, that I've got a lot of exposure to. Again, this is very much similar to one of my previous answers where it is horses for courses, for want of a better, I suppose, kind of use of language. But ultimately, it does really come down to what your preference is. If you want simple, I want to do it myself at 8 o'clock in the evening when I am watching EastEnders, is 8 o'clock, isn't it? When I'm watching EastEnders or Love Island or whatever it may be, if that's the kind of, you know, setup process that you want, Revolut is going to be a much better option for you. If you're the kind of person that would much prefer to go in and see John or Mary, the bank manager, and have a conversation with them face to face, AIB, Bank of Ireland, TSB is going to be a better option for yourself. In terms of minimising the fees, I don't know if there's too much that can be done on that, to be honest. I do know that obviously there might be a small difference between Revolut and, you know, Bank of Ireland, AIB, PS. When you group them all together, there's very small differences between them. But like I say, in terms of if you want quick, seamless setup and, you know, access at your fingertips, I would say Revolut is the best option. If you want to be able to go in and have a conversation with the bank manager, then I would say that one of the traditional brick and mortar banks is probably more kind of up your street. But yeah, the beautiful thing there is options, and that's never a bad thing.
No, it's not. Okay, that's all our questions finished from our contractor community. Yeah. It's been. I've really enjoyed it. I've really enjoyed the first season. I think you've done a splendid job. You have, both, in terms of both have done a splendid job. Well, I think everyone was probably kind of, I suppose, used to hearing my voice from webinars and stuff during COVID, whereas I think your edition has been absolutely refreshing, but it wouldn't happen without you. Again, the team obviously here at Factory 44 have been absolutely unreal to work with. Would definitely recommend it to anyone that is interested in doing any recording or any kind of podcast themselves. But I suppose what we need to do now is thank everyone in terms of our audience. We do normally finish with a dilemma. We're not going to do that this time around. Not this time, I think. We're going to instead kind of pick out maybe some highlights that we've had. Yeah, I think given that it's the end of a season, it's like a better, what's the peak in the pit? Never heard of it. The Kardashians. Oh, well, there you go. That explains it. That explains why I've never heard of it. But the peak of this season, I kind of have, so I actually do have two. I had one initially, but now I have two. Right, okay. Can't decide. So the first would be having Shauna on as a guest, more so because I got my marketing buddy in. So yeah, I just really enjoyed having someone kind of doing the same work as I would do and kind of getting their insights. I felt like I was almost, like I think I said it in the episode when she was speaking, I was like, I'm learning so much about myself now. Like the way I work and everything. And why you are the way you are. And so yeah, I loved having Sean on a guest level. She was phenomenal, wasn't she? It was like a chat, you know, it was genuinely like a chat that you'd have. And it's any time you speak to her, it's literally that, like the podcast episode is our chat in the background anyways. So thank you, Shauna, for making season 1 for me. What other highlight then? Jer. having Jer on.
I think that was so important. Do you know what I mean? Because 16 years in business.
Yeah.
16? No,
2008.
17. We're going on 17. 17 years.
October.
So we've completed 16. We're actually into our 17th year business. And to give people the opportunity to actually, you know, get to know the man behind the brand and how I suppose it's gone from being literally up in his converted attic to being now at the penthouse in Columba House. Yeah. Really enjoyed that. I think that was very popular. I think an awful lot of people got to know a little bit more about the man behind the name.
I think it was also like some stories I've obviously heard, so I was like, I know that, but then hearing someone, I was like, I've never heard that.
Yeah.
Like, where was that story?
He kept some nuggets for us, to be fair.
Storyteller.
Like again, all of our guests have been absolutely incredible. You know, we're absolutely not trying to, I suppose, take anything away from our guests by picking out these highlights. One of the highlights for me, and again, it wasn't necessarily guest related, so no offense to Robert, but it was about the go-to-market strategy that Revolut had, and the way Robert Whelan told that story and how clever they are. That was definitely up there for me, because I've always been fascinated about go-to-market strategies and how people do things. So props to Revolut and to Robert for telling that story. The other one that I really enjoyed was the episode of Cutie, and specifically the kind of explanation of a Recruit Pro and what she's building over there. I genuinely think that is going to be game changing.
Yeah.
In terms of what it can do, not only for, I suppose, the back end operations of a recruitment business, who obviously we're very closely partnered with and thankful to, but in terms of the what that system is going to free up in terms of time for business development, client relationships, actually selecting, recruiting talent, it's going to be a game changer for the overall industry. So I really enjoyed getting to know a little bit more about how that system works.
Yeah.
And yet there, I suppose, my highlights, I think. Outside of that, like I say, it's been absolutely phenomenal to get to sit and chat to people in a relaxed kind of, you know, exactly how I think we had
imagined it to be. Yeah,
exactly.
Definitely. And I think it's good, just like, I think information is always good to have. So I think it's good that we just have another form of presenting it. So it's not like
a blog or
and not, even though I make them the newsletters, like I can't, you know, just a different form of learning.
And look, again, we've touched on it earlier, the demographics of the contractor space and the contractor community are changing.
Yeah.
We need to make sure that we're
changing with it
100%, and that we're putting information out there to as many people that are, you know, interested in learning more about contracting or any of the other things, I suppose, that come with contracting. So next season, are you going to give us any kind of hints before we close up in terms of what we can expect?
Well, we're not going to be gone for long. I could say that anyway.
Okay.
So season 2, it's already in the works, already in the background.
Excellent.
I feel like I've given enough. I've given a few spoilers
you've given enough. Okay.
That. Yeah, so I'm like the rest.
Yeah, you're keeping the rest to your chest. Okay.
Yeah,
okay. Yeah. Again, we just to reiterate our thanks and appreciation to everyone that has listened along, whether it was on the Apple platform, Spotify, YouTube,
Acast as well.
Acast is also there, but it's been incredible. Again, we are absolutely welcome to any feedback that you may have, any guests that you'd like to see. Please reach out. We have had some, you know, suggestions for the likes of Gary V and these massive people. We'll do our best.
We'll try.
We're not going to rule it out. Don't get me wrong. We'll never say no to a challenge. But please do, like I say, any suggestions that you have for guests or topics that you'd like to see us cover, make sure to get in touch with us, because we will do our absolute utmost to deliver them for you.